The watch market has experienced rapid growth and declines over the past few years, making it incredibly volatile. And this is quite evident in the price appreciations that have occurred and then immediate corrections thereafter. Now, the question really isn't what happened, it's more so what structural takes or signals are we getting out of these markets, and are there new emerging markets for entrants to enter into, especially if you're looking at long-term investing and collecting. And this is quite indicative with the generational shift that's occurring in the market, where there's some statistics that say up to 64% of new entrants into the luxury watch market are Gen Z and millennials, and up to 94% of them are opting for collectible items rather than, contrary to popular belief, these hyped up brands and watches. So it's going to create a really interesting outlook on future investing and collections, because salespeople will also have to in turn adapt their approach to not try and necessarily push the typical or cliche products, but they'll have to expand into independent watchmaking brands and different classes or brackets within particularly existing brands already. And another aspect that's really going to make the new emerging markets interesting to look at is the fact that most new entrants into the market are actually really well versed in what they want. Salespeople aren't going to be the people selling the product anymore, but it's going to be the brand's marketing that's selling the product. And that's all done digitally, especially if you're looking at Gen Z and millennial buyers and investors. They already know what they want when they walk into the authorized dealer or deal with the secondary market. They aren't looking to be sold on something. They just want you to show them how much is available to buy within the bracket of what they already want. So it's creating a really fascinating outlook going forward. Another thing is increased price transparency. And I think this has sort of been something that's been brewing for quite a long time. Not so much primary, but a lot more in the secondary market, where if people are interested in trading on the secondary market, they definitely have to be more forward and more forgiving with their pricing and purchase versus resale values. Because I think the more educated the entrants into the market are, the more this idea of being transparent comes into play. Then geographical demand patterns are also very interesting, because there's so many different markets emerging globally, whether it's within one country and there's just different demand dynamics, or globally. And we can see this with the emerging Middle Eastern market, where Swiss brands are massively increasing in their exports to the Middle Eastern market, as well as the Asian markets, where a lot more focus on vintage pieces is being made than the typical hyped up products. And they are really interested in supporting their own local brands. So Seiko, Casio, these kinds of brands are getting a lot more attention in Asia post-COVID because of that boom that sort of died down with the Swiss luxury market. So another interesting aspect of this increase in a younger generation coming into the picture, that it's more educated, etc., is the rise of independent watchmakers. And I think there's a massive gap here for independent watchmakers to capitalize on, because there's lower production, which makes the product more appealing because there's less available. And if new entrants into the market are seen as looking towards more collectible items, independent watchmakers have got a massively unfair advantage here. And also because there's this emotional tie, there's an emotional connection to making the purchase. So it's going to be really appealing for independent watchmakers to target this younger generation, because of the fact that they want this engagement, they want the experience, they don't want the hype necessarily. The hype is very cyclical, but independent watchmaking, where there's craftsmanship involved and emotional intelligence, that can outlast any kind of market volatility over time. And market transparency, which ties into price transparency, is also a factor that's definitely going to shape the future of watch collecting and investing, because of the fact that there are so many different online marketplaces now. The options are readily available for collectors and buyers. So there is no real desire to only purchase a timepiece from one specific authorized dealer or one specific online marketplace, unless, of course, they have targeted these buyers in such a way to create this personal experience with purchasing a timepiece, and also to create motivations for different brands, and not just trying to push a certain product onto the new and prospective buyer just to be able to make a profit. And another area where it's really interesting is the auction digitization. So auction houses have become strong and really strong online in terms of luxury watch sales. And that's going to be something to look out for in the coming years, because I think there's going to be a lot more social media, online selling or live shopping versus going the traditional route of venturing into an authorized dealer, potentially having to go onto a waiting list for timepieces, or just the lengthy experience of all of it isn't really matching the energy of younger entrants into the market. Then, of course, global capital diversification is important, and I've previously mentioned the Middle Eastern demand growing, specifically in Swiss brands, but it's also because of the younger entrants into the Middle Eastern market. So that's pushing up, firstly, the secondary market prices, and that's still quite a strong area to consider in the Middle East. And it's also because younger entrants have got more energy and more time to think about their collections. You know, when you've invested for 20, 30 years already, you've got a lot less time to be able to experience with your collection or experiment rather with your collection. Whereas younger entrants have got a lot more pliability, and they can sort of change tact as they see fit. And again, coming to the Asian collector market, they are really focused on vintages and rarer timepieces post-COVID. I think that hype's died down, and I do think it's going to stay like that for quite some time. So the traditional brands with their traditional marketing structures that sort of capitalized on that hype, they're really going to have to rethink their marketing structure, because the younger entrants, as we can see, are clearly interested in something else, and that's going to be very exciting going forward. Then portfolio diversifications, I think, again, this is going to be more personal. It's going to be something each person has to figure out for themselves, because going forward, there will be young entrants that already come into the market with a lot of money. A lot more people are making money at an earlier age. But then there will also be new entrants that really don't have that much in terms of a portfolio with other investments or capital goods, where they're really going to put their heart and soul into that first timepiece purchase with the hopes that this is adding to their portfolio. So it's not going to be this traditional, holding gold, property, equities, and other kinds of assets per se, because a lot of these younger entrants are just focusing, and I saw a stat up to about 46% of their portfolio value into luxury watches, it's incredible and it's insane, but this is a great indication as to where the market is heading. So I think based on this, there's a lot less reward going forward for impulsive buying. As we can see, even the younger generations are coming into the market being more educated. They're coming into the market with some reason for being there. It's not just stepping into a sphere where they're uncertain what they're doing and they're just going to make an impulsive buy. There'll definitely still be these hypes, and these cycles will still be around, but I do think the more people start spending their own money, going out of budget or making certain financial mistakes potentially within the market, and then rectifying them afterwards, is going to cause a massive shift towards more collectible type items. And I'm really excited to see what's going to happen for independent watchmakers and the younger generation's collections going forward.